the feeling that we're on the cusp of something really historic here, which the last couple of weeks kind of gave us a little bit of a sample of what that just might look like.
Welcome back to Liberty and Finance and Reluctant Preppers. We have a returning guest. David Smith is the senior analyst at themorganreport.com. David, thanks for coming back on the show.
Oh, it's great to be back, Dunnigan.
It was a delight to have you in our booth at the Sprott Natural Resources Symposium, the virtual symposium last week. You came in expecting to stop in for about a 20 or 30-minute speaker close-up interview, and you ended up staying almost 3 hours because we had other speakers joining in the booth, and it started to be just a panel discussion between you and them, and the rest of us were just eating it up, being able to hear sort of a lot of exploration about the impacts that precious metals mining has on different jurisdictions in the world, both economically, environmentally, how it affects the people, how it affects the relationship between the countries, and so on. It was a fascinating discussion, and maybe we'll touch on a few of those points today. But what we'd really like to get is your, I guess, big picture takeaways from the Sprott Natural Resources Conference that you heard from other speakers, that came out in discussions of the material that you presented there and the questions that people asked you about that. Kind of what were your biggest eye-opening moments and takeaways from the conference that are able to be shared with all of our subscribers?
Well, I've been on several different platforms using virtual conferences in the last year or so, and Sprott is the most sophisticated one I've been on, and I was very impressed. And I think, from what I'm hearing, it might have been so successful by bringing in people that wouldn't have had an opportunity to hear these speakers, that we may have a duo next year with a virtual and the face-to-face, which I think would be incredible. I think it would bring a whole new layer of people in, and they would realize the tremendous strength of the conference, which to me is very powerful, not only from the presenter standpoint, which have literally some of the best people in the sector, and they've been and done, but also the miners themselves they have to be invited, and some of their shares are held by Sprott. So this is you don't hardly ever find that in a conference. You don't just pay your $5,000 for a booth and show up. You actually have to be invited, and that's the same way with the speakers. And I was certainly privileged to be invited to be there this year.
I want to underscore one of the things you mentioned, because we heard some really positive comments on some of the conference attendees who visited our booth there. They were saying that because we had done shift rotations among our team, so we had almost 24-hour coverage in our booth during the entire 72 hours of the conference. And people would come in. We had guys from South Africa, from Australia, from New Zealand, from Europe, from the U.S., Canada, all calling in and visiting and sometimes chatting for hours with different members of our team in the booth. And they said, you don't get this kind of up close and personal, getting to know people that you've met online. I mean, I was there representing Finance and Liberty as well as Miles Franklin, but we also had Maurice Jackson from provenandprobable.com. We had Chris Marcus from ArcadiaEconomics.com. And so people who have been followers of these independent media platform founders for years, sometimes almost a decade, were able to meet them in a very personal and up-close way in these video chat sessions on the virtual conference. It was quite remarkable. I think it was something that we all came away with surprises, basically surprising benefits that we didn't expect coming from that format.
I would concur with that 100%, Dunnigan. A lot of attendees rolled in. It was a big learning experience for all of us, and get to talk to people with different skill sets within the resource sector, and people asking penetrating questions, and the feeling that we're on the cusp of something really historic here, which the last couple of weeks kind of gave us a little bit of a sample of what that just might look like.
Yeah, would you talk to us about that? People have certainly been calling me around the clock, and other members of our team talking about their interest in protecting some of their finances into precious metals, that sort of thing, at this time when there's a lot of concern about the stability of the banking system and the stability of our geopolitical environment and so on, trade wars, saber rattling going on with that. What do you see happening in the broader economic and financial picture, and how you see that reflected in the metals markets?
Well, there's so many elements that are unique in them coming together this way, and they almost like the whole is greater than the sum of the parts. I mean, if COVID came along and we had good financial structure in the U.S. and everything was quiet socially, that would be one thing. But we have all sorts of issues with the disparity of income from the high earners to the low earners. We have the COVID, which pretty much globally they shut down the economy in a way that's never been done before over any kind of health concerns like that. We have politicians that really have forgotten to pay attention to the people that put them there, that they defer to us, we don't defer to them. And we have supply-demand situations in the precious metals, especially gold and silver, and to a lesser extent copper, that really threaten to upend the price structure, given that a small increase in demand, and we've seen a massive increase in demand in the last month or so, really all these things coming together makes it difficult to look at the charts and say, yeah, this is where the price is going to stop, or it'll be here for a couple months or whatever. And I think we're moving into a phase of the market, and we're pretty much in a correction right now with gold and silver and the miners. Today being Thursday was fairly weak. We'll see how it closes a week out. But these are natural and normal and necessary. But what I think is going to happen is the corrections will be shorter. They might be quite violent, but they'll turn around more quickly than most people expect. And I remember trading in the 70s, not only metals, but soybeans and sugar. And sometimes we would see a limit down day after an explosive rise. And people would think, well, that's going to be it for a few months. The next day it will be up another 60 points beyond where it closed down. So pay attention to the charts, but don't get wedded to them. My fear is that a lot of people are going to miss out on most of this, just like they did in 2016 when prices ran for 6 months. And most of the experts were saying, take profits here, resistance here. And silver didn't pay attention, and gold, they just cut through the resistance like a knife through butter. And we're seeing some of that already. I mean, we had a situation earlier in the week where silver closed at 24 something, and overnight it traded as high as 26, and then it ended up the next day at the same price it closed. It didn't drop $4. It closed and held there, which I thought was a pretty important tell, notwithstanding the weakness that we've had in the last couple of days.
That's interesting, because we were noticing the same thing during that period of time. And you're mentioning the price action. I'm also subject to the availability and the volume on the supply and demand side, because I'm getting calls as a bullion dealer throughout the day from people who are seriously concerned about how to protect some of their IRA, 401k, cash savings. They're cashing out of their stock accounts and that sort of thing. They're saying, I've got this much money, I want to protect it. And most people are asking about the flagship bullion products that we all think about, like American Silver Eagles, Gold Eagles, that kind of thing, and even Canadian Silver Maples. And those are the first things that became backordered. And we went from no delay to 2 weeks delay to 4 weeks delay just in the blink of a couple days. And now we've had story just came out yesterday about the West Point Mint having to do a partial shutdown because of their COVID distancing rules or whatever. So they're only going to be able to produce either Silver Eagles or Gold Eagles, but not both at the same time. And so they're having to only run certain parts of their line and not others. So we're getting reduced supply at the same time that we're definitely seeing increased demand. So we are seeing back orders increase in the same time that price action is happening you're describing.
What you just mentioned, I think, is unprecedented. They're asking their better customers, tell us about what you think you're going to need for the next 12 to 18 months. How in the world do you do anything like that? If it was quiet, you might have a sense, but what's going on now is, I don't know how you predict something like that.
No, it's right, because people are, I think really, it's interesting for people like you and me who have been concerned for a long time and paying attention for a long time and maybe tuned in to the precious metals arena for a long time. This is finally, we're seeing now the beginnings of a broader awakening. And it's interesting because up till now, whenever we've brought up this topic with any family members or neighbors or coworkers, they look at you like you're just speaking a foreign language. They have no idea what you're talking about. But now if you're starting to see, they can't help but talk about it on the evening news, because the last several days it's like gold making all-time highs, gold making all-time highs, gold making all-time highs. It's like, well, you can't not talk about that when something is breaking out to all-time highs, and that is going to start getting people to start asking, well, why is that important? Why is that happening? When things get talked about a lot, usually people wonder why.
And they start asking, what is real money? And that's one of the things that the debut of Bitcoin has done. It got people talking about gold and Bitcoin and what's the difference between paper money, fiat money. It's not paper money, it's paper currency. And at the Miles Franklin booth, Andy Schechtman was there most of the time, and I think that he has as good a handle on the silver situation. He's been at it for 35 years or so as anyone that I know or know of. And his discussion on the J.P. Morgan thing, where they have half a dozen of their traders, are potentially under indictment. And this is something that's been going on for a couple generations, where these markets have been skewed to the downside that don't represent anything about what the real value of silver is. Nobody on the face of the earth today, not you, not me, not anybody, really knows where silver should be or where it would be if it hadn't been held down by the likes of J.P. Morgan and the others over the last 15, 20 years. And they were on the short side, and they had, I don't know how many years of not a single day of trading losses, which defies belief. I mean, you can't create a mathematic model that can come up with something like that. So when this finally breaks loose, and I think it's almost like an ice breakup up in Alaska, where the river, starts to crack and cringle and crease, and you see the ice pieces jagging up, but the current hasn't really carried it away yet. And then it gets more and more, and finally there's this eruption, and things going all over the place, and suddenly the river just carries all this massive flow from the winter away, the ice flow, and that's what's going to happen in silver. And I think one of these days we're going to see $10 moves in one day, and it's going to catch everybody by surprise. And what we saw, that overnight thing, is just a harbinger of that, in my view.
Let's circle back, if we could, to the Sprott Conference. You were there, as I was, for the 3 days, and you must have had opportunities to take in other speakers or conversations of some consequence. You talked about penetrating questions that people asked. What were some of the most sort of eye-opening or mind-expanding awarenesses that you walked away with from the conference?
Well, I've always had the utmost respect for Robert Friedland, and there was like a 1-hour interview where he's doing with the copper properties in Africa, and how he spent 25 years developing the social contract. And one of his operations, almost half the employees are women, and he has the Platte Reef PGM deposit in South Africa that can be easily mined because it's flat and shallow. It can be almost scraped across with jumbos. And he is just such a font of knowledge, and that was great. And then, of course, listening to Keith Barron talking about his Ecuador project, and Keith made the largest gold discovery of the last 25 years in 2006, Fruta del Norte. And so these are people who've been and done. And Ross Beatty, who's working on a capstone gold project now. And this guy, he's known by his colleagues as the broken slot machine, because just about everything he does comes up a winner. It's just stunning. And then, of course, Rick Rule did several presentations, and one of them which was on the environmental policies that are being pursued by the miners, which I find to be a very fascinating subject. And it's one that I think most people they're not aware just how far the mining community has come from even 5 years ago, let alone 10 or 15. And this thing of the open hole in the ground with a bunch of discolored liquid in it, that doesn't happen anymore. And before you can even start a new project in most countries, you have to post a security bond that figure out about what it's going to cost to restore the area to where it was. And that money sits in there as a captive, and your end of mine life then it is utilized to restore that property. And so a lot of things, and there's a lot of new technology going on, and a lot of really good thinking. And I think this can only be good for the sector. And some people still have a jaundiced view of mining, but like David Morgan likes to say, everything that we use in our lives today is either mined or grown. And if you look around you, the chair that you're sitting next to, and the electronic things that you're using, you name it, it came from mining. And we're finding better ways to do that, and safer ways for the workers. And I think it's all to the good. And Rick's discussion on that was, I just thought, top notch.
Related to that was part of a discussion that we had in our impromptu panel that happened in our booth, and we were talking about sort of some geopolitical alignment and new economy allies or alliances that are forming between, for example, China and African countries or other things, developing infrastructure so that they can facilitate mining and that sort of thing. It's interesting because having learned a lot about Western civilization in my college years and so on, about the colonial era for 300 years or whatever, a lot of exploitation, taking advantage of just going in, taking all the wealth and taking it back to the European countries, that kind of thing. It seems like there's a different model that's developing now, that's emerging, that involves making sure that you leave the host country with more infrastructure than what they had before you arrived, that kind of thing. What do you see as some potentially, I guess, redeeming aspects of new economic models that are emerging about collaboration regarding mining?
I think more countries are holding miners responsible for their behavior, for their impact on the environment, for the way they treat the locals, and the setup, so that after they're gone or after they go into production, the people continue to benefit. And there are a number of people at the conference that you could talk to that are doing just this in their work. But I follow Keith Barron very closely in his work in Ecuador, and he has gone way beyond the pale in this, in helping people and bringing villages together that never had any connection, and that they're all going to be working there. And some of the people that he is now seeing, their children, their fathers and mothers actually were participating in the Fruta del Norte discovery and development in 2005 and 6. So it shows that you can have responsible mining that helps people, and in many areas of the world, mining is some of the highest paying jobs that most people would be able to get. And if you're doing it safer for them, and better exchange of air when you have an underground mine, and less likely to have issues with moving equipment around, things like that. And that builds up a very good positive attitude within the country. And I would say it would go so far to say, and I've been to very few operations, over the last 10 or 15 years, whether it's Argentina or Mexico or Bolivia, that didn't have a real, that didn't place a big value on the social contract, to the point that one of the mines that I visited in Bolivia, when the government nationalized mines there about 15 or 20 years ago, the workers were upset because they knew that it was going to be government inefficiency. They actually closed some of the adits so that they couldn't be mined. And basically they made part of the mine inoperable so that the government had a heck of a time getting it producing again. This is solidarity with the workers and management, and they would have only done that if they had been treated, and they were, fairly and consistently, because they knew where their loyalties lay.
That's really fascinating, because coming from a family that I did was really big on social responsibility and environmentalism and that sort of thing, it was just like mining bad. I mean, that was what I was taught. So I'm learning to see things in a new light as far as a lot of the dependence that we have in our life today on things that were mined, and on the new approaches that are demonstrating better environmental responsibility, and economic responsibility, and cultural and social responsibility. It's encouraging to me.
Absolutely. And there are things like, instead of having these big tailings dams, they have dried tailings, where they siphon most of the moisture out. And when they finish with an adit, they actually put it back into the ground with some cement mixed in, and it bonds just like claws to the wall. And so you don't have any structural degradation underneath the ground. It's just like before the adit was ever drilled in there. And of course, it's not visible, and it doesn't contaminate anything. And you have in situ recovery going on with all sorts of research in being able to take gold, silver, and uranium and other metals out of the ground without having to build an open pit, without having to have a smelter, without having to build a mill. And so these things are changing the face of mining. And I think it's something we can all, that we're involved in, can say, I'm proud to be reporting on this. I'm proud to go to these places and see how they are treating the people that work there and how they're doing everything they can to minimize their operational footprint.
I'd like to see if we could talk a little bit about a topic you brought up when you visited our booth, about something you heard a speaker describe that made you examine your own investment style and your portfolio and look for using the Pareto Principle. If I think people who are listening to this would be interested in hearing your takeaways on that, because you really took it to heart and you put that into practice, and were, I guess, pretty self-reflective about kind of checking your own, emotional versus logical versus investor or speculator behavior, and you believed that it was going to give you some wisdom to improve your results going forward. Can you give us the main nutshell?
Yeah, that was really an amazing thing. I would say it's one of the biggest epiphanies that I've had in at least the last 5 years, maybe longer. And I listened to Peter Groskopf of Sprott Global. He doesn't do very many YouTube type interviews. And he was talking long, and I always like to hear what he has to say. And all of a sudden, he said something that just caused light bulbs to start going off in my head. He said, the people that are the most successful that I know observe two things in their metals and mining trading. Number one, they buy when others are selling, and they sell when others are buying, which we all know is very hard to do. And every one of us knows that to the extent that we can actually do that, our success will be magnified, especially with the big moves we're starting to say. But the second thing was what really blew me away. We're all familiar with the Pareto Principle, which can be, it's conceptually related to just about anything. And basically it says in the simplest form that 20% of the effort that you put in on a job out of 100% will yield 80% of the results. And so if he was talking about it with buying mining stocks, and he said 20% of the stocks that you hold will yield 80% of your profits, and the other 80% more or less detract from that. And I got to thinking about that, and I thought, I know the Pareto Principle backwards and forward, but I never thought about applying it to my portfolio. I went over that night, I got online, and I looked at the ones that I perceived to be my 20 percenters. And there's a subjective thing there, but I've done a lot of research, and I'm comfortable that most of the ones that I would categorize that way are or have a high opportunity to do that, right? And indeed, they were showing me greater profits at that point than the rest of my portfolio. And when I did the count, darned if it wasn't 20%. I had about 30 stocks. 6 or 7 of them. I have one that's not performing now, but I think it has great potential. But you've got to have an outlier there somewhere. But the other 6 were doing the job for me. And so the next question then, and again, somebody might approach this understanding differently, but I asked myself, if I believe, now not everybody would be comfortable with this, but if I believe that those 6 that I identified as being the 80 percenters, would it not make sense to accept a little bit more risk and overweight myself with those 6, and then in addition, be very careful about any new additions that I made, and ask myself before I added anything, is this something that could become a 20 percenter? Or if not, is it going to detract from my profits? And I've turned down some opportunities to pick up a stock that I was kind of interested in, because I subjectively, and I could be wrong, but I subjectively, after doing my research, did not think that fit my view of what a Pareto Principle position would be. And so what I did on the others that I had, the 6, 3 of the 6, I was underweight in relationship to the number of shares that I wanted to hold to get the stellar gains, not just to make a 20%er with everything that I have as 5%, but jack that up to 9 or 10, which again, not everybody's comfortable with, but I'm willing to accept that kind of risk if I'm really sure I've done my math and I know it's the people, the project, the place, the overall potential. And so I was up like 40% in a matter of a few days with 2 of the 3 that I'd added. And one of them is up now almost 500%. And I had doubled that, before that rise got started. So it's just fascinating. And that's why I think it's important to listen to people like that are in the Sprott Conference, because they've all been and done, And you can learn more from somebody like Rick Rule or Andy Scheckman, or Ross Beatty, or any number of people, Rob Friedland, in 20 minutes, in 30 minutes. Just pay attention, and you'll pick up something like I did with Peter, that makes it amazingly worthwhile.
Well, David, it's been great having you before the conference, during the conference, and now after the conference. And we know that there's lots of other research that you do for themorganreport.com. You are one of the field reporters. You go and do the analysis, and you do the trips to the producers, and you investigate them. Is there any recent or upcoming travel that you've got that you'd like to let us know about so people can follow your work?
Well, so much of the travel is constricted by knowing when Canada's going to reopen. Is Mexico going to require a 14-day stay? What about Argentina? And, there are people that have been down in Argentina for months that were fishing down there that couldn't get out, that they just, got to the point where Argentina says nobody's leaving. So those are concerns, but I have a couple of properties that I'd like to see, if possible, before the end of the year in Canada, and a couple in Mexico for sure, fairly close by geographically, but could be on the moon compared to the ability to get there. But I cross my fingers and hope, and I like to go to Vancouver every few months. I haven't been up there since, I guess, February. I attended a conference up there in January, but I really miss that place, and I miss my Canadian friends, not to mention to be able to check out some mining stores. So let's hope that, say, by September, maybe, certainly by October, that we get a chance to take some of these travels, and I'm ready to go. My bags are packed, and I continue to update the research on the plays that I think can bring the greatest potential value to the Morgan Report readers.
Well, you mentioned Andy Scheckman as one of the people that that people like to listen to the experience of. He's coming back on our channel this weekend, so people, make sure you submit your questions for Andy Scheckman. And we just wanted to thank you, David Smith from the Morgan Report, for joining us again on this post-Sprott Conference follow-up interview. And we look forward to many more visits with you in the future. And just thanks for making time for us today.
Well, it was really great to be here, Donegan, and I appreciate the invite. And you do great work with the people that you service, and with the work that you do on YouTube. And I have a lot of respect for what you do and the way you approach it. So you're tops in my book.
It's been humbling being able to talk with people who call me asking about how to solve challenges in their own financial lives with bullion, how to get access to it, questions about IRAs and everything. I get to hear so many stories about what people are actually going through, and it's humbling to be able to be of help to people. I know you and David Morgan are helps to many people in this similar way. So just glad that we can do that, glad that we can reach out to people, and people don't hesitate to call. There'll be a message right after this letting you know how to reach me. And people want to reach you, David, what should they do?
They can write to support@themorganreport.com, and we'll be able to communicate that way. David has a free weekly letter they can sign up for, or they can become a participant in either his regular service or his premium service, which people have really been happy about.
Support@themorganreport.com. All right. Thank you, David Smith, for joining us.
Take care. It's been great speaking with you.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.